Hey everybody, and welcome to Stock Abilities. Today I'm going to be covering just the overall average stock market return. I've covered different stocks in particular, but this time I'm just going to be going over what to expect if you're investing in stocks. Now, according to Warren Buffett, the average would be about a 7%. He gets the collection of that data from just like standard investments, investing in the S&P and all that kind of stuff. You're not going to really experience much of a good return on investment if you're just investing in ETFs, in my opinion. I'm going to be going into that, so make sure to like and share this video and subscribe to the channel for more videos like this. Now, as you can read here, this is just some data of the overall from 1950 all the way to 2010, and as you can see, the average growth would be about 7%, but we're not going to get into that too much. The ones that you want to look for is bigger returns. As you can see, even with the Roth IRA, you can expect maybe as much as a 10.7% return, which was still pretty terrible. Of course, there in some cases you can get higher ones. And in a CD, if you're just holding it in a bank or in a CD, you can't expect much. You'd expect more than you'd get from a bank. A bank would give you maybe 1%, 2%. You might get about 2 to 3% from a CD, but that's not really stock market investing per se. Then you got some unusual ETFs. Uh, as you can see here, there's been a 639% return on Soxel here, and then you go down a little bit more and more and more, and the percents get lower and lower. There isn't very many that go up this high and skyrocket. Kind of depends the industry and all of that. Going a little bit further, as you can see, you're just reading into it some more on Quora. With the average return on ETFs, a lot of people say 7 to 10%. That's rather low if you consider it throughout the whole year. Going a little bit further here, you got a conservative growth ETF. You got a 5.50%, 5.5% return within a year, within 3 years, and then within 5 years, a 4% return. That's rather low as well. Get it a little bit more moderate and aggressive. You got up to 7%, and then average of 5 years is 5% annual each year. That's pretty terrible. And then you go all the way up to here, rather aggressive growth. It's 9.89, 4.89 to 7.1, and these are all rather low still in that regard, but if you compare it to a bank, it's still rather high in comparison. Then you go into the value stocks for FinViz. Now, I use this as a general tool because you can get a lot better of a return in that regard. You're picking a profitable value stock, you're picking naturally growing EPS over the next 5 years rather, and as well as the previous 5 years. So these are all looking pretty healthy. These can jump a lot more significantly than an ETF because they are actual companies with value behind them. An ETF is like diversifying in a multitude of stocks, which isn't that bad of an idea, but at the same time, if you want more than a 5% return annually, these are the kind of stocks to go towards. Of course, with less risk, you just add price up and up and up until you're comfortable at where you're at. And of course, if you want less volatility, you add the volume, average volume up higher and higher so you can get the shorts kind of out of there and involved. So you can just get like a naturally growing stock. Something to consider, there is the cannabis ETF that just came out. It had a nice rally up to 1184, and then it's been crashing down since. It's not quite ready yet for a live market. Expectations for cannabis to really grow would be probably 2020. They got another one coming out here, but this goes more into details than the one I just covered. Investors are clearly attracted to the industry. We feel that the methodology of the North American Medicinal Marijuana Index will maximize the risk-reward opportunity for investors. He goes in a little bit more details, but generally it's looking promising. Going a little bit further, there is the Agrosphere ETF coming out. It's not quite out yet, but there's going to be a lot of lot of excitement in this, and they had a fairly nice list. This source doesn't really list that, but of the expected stocks that they want to support in their ETF, and it looked very promising. Of course, it's up to you to invest in the different ETFs. There's not going to be too many out, but by 2020, you should expect quite a tremendous growth, probably an explosion, maybe 200-300% return on investment within like 3 years. Going a little bit further here, as you can see, you got the North American Index. Uh, Lately, it's been going pretty well. It's a little bit down from like around when Trump got elected and all that kind of stuff. A little bit of volatility. Going to the US one, it's kind of on a little bit of a downturn, but at the same time, it didn't ultimately crash all the way. Then you get the cannabis one for Canada. As you can see here, it's been naturally growing for many years, and it's really jumped in the last couple years since about 2015, and it's just going to keep growing. And you get a market this big, and you got a cannabis ETF. It's pretty self-explanatory. It's going to be going up. Some other things to note is that biotechs tend to jump every now and then with fluff news and low floats and all that. As you can see here, they did a reverse split for Interomedics, and then they did in some other things in there, like clearing out and finishing offering. And as you can see here, it popped from 188 to 2770. I cover offerings and all that in my other videos, so make sure to check that out. But as you can see, that's quite a big jump. Right now it's settled down to about 547, but as you can see, you get spikes like this, even from fluff news from other companies, so it's something to consider. In regards to day trade, swing trade, as you can see, even yearly with the right companies, you can get a lot of growth. As you can see from AMD, it went from 262 just in April of last year to 1295 is where it sits at right now. They're getting ready to do another rally, so you might see this at 20 plus very, very soon. Uh, Beyond that, that I believe covers everything I wanted to cover in this video. If you feel I missed something or you have more questions about my different scanners here, I do a lot of different scanners. I covered that in another video, which I'll try to link to in the description below. Make sure to subscribe to the channel if you want more videos like this, and have a nice day.